Hello and welcome to AI Market News by LM. So NVIDIA just dropped another absolute bombshell of an earnings report, completely crushing expectations and showing the AI boom is, well, it's running hotter than ever. But here's the weird part. Instead of a huge rally, the market kind of got the jitters. So today we are unpacking this really fascinating puzzle.
Right? It's the big question. How can a company report such incredible results, have such a confident outlook, only to see investor sentiment turn sour? This disconnect is absolutely key to understanding what's going on in the AI market right now, and we're going to break it all down.
Okay, first things first. Let's just establish how ridiculously good this news actually was. I mean, on paper, NVIDIA delivered everything investors could have possibly hoped for and then some. The fundamentals are, without a doubt, incredibly strong.
This quote from an analyst really nails the initial reaction. The numbers weren't just good, they were a powerful signal that the massive investment in AI infrastructure is just continuing at a blistering pace.
And here is the number that should have sent the stock to the moon. $78 billion. That's what NVIDIA is forecasting for first quarter sales. That didn't just beat estimates, it blew them out of the water. This is not a slowdown, this is a massive acceleration.
And we can see exactly where that demand is coming from. A 75% jump in data center revenue, year over year. That's all the proof we need that the world's biggest companies are in a full-blown arms race to build out their AI capabilities. All right, so with such an overwhelmingly strong picture, why on earth did the market get cold feet? Let's flip the coin and explore the other side of this story, the narrative of fear and maybe a little bit of fatigue.
This slide just lays the whole paradox bare. On one side, we've got these rock-solid fundamentals. On the other, we have this fearful sentiment that's actually driving the market. It's this clash, this battle between reality and perception that's causing all the turbulence.
So here's a really crucial concept to get our heads around: the AI scare trade. Now, this isn't about NVIDIA failing. Not at all. It's about the fear of what NVIDIA's success means for other industries. Investors are getting worried that as AI gets more and more powerful, it's going to completely disrupt existing software business models. And we're seeing that play out in stocks like Salesforce, which has kind of become the poster child for this anxiety.
The other factor here is just simple fatigue, NVIDIA has been so successful quarter after quarter that the market has almost become numb to the beats. When a company is already worth trillions, even a spectacular earnings report might not be enough to move the needle if perfection is already baked into the price. But this story isn't just about the US market. When we zoom out and take a look at the global picture, we see this really fascinating split in how different parts of the world are reacting to this whole AI revolution. This table shows that split perfectly. While the US NASDAQ is all jittery about software being disrupted, South Korea's KOSPI is on an absolute tear. The story is completely different depending on where you look, and it really all comes down to what part of the AI supply chain you're in. So why the split? Well, it's pretty straightforward. US investors are worried about the software companies that AI might replace. But at the same time, Asian markets, especially South Korea, are celebrating because they're the ones building the hardware. I mean, memory chip makers there have their order books full for years, all the way into 2027. That's leading analysts to call this a super cycle, a fundamental long-term shift, not just some temporary boom. And this global split isn't just showing up in stocks. It's also making some really big waves in the currency markets. This is creating a major story for the US dollar and its counterparts around the world. The main theme here, the big headline, is a weaker US dollar. And that trend is really the primary driver behind some of the most significant moves we're seeing across the globe.
And we can see the direct results of that dollar weakness right here. The Japanese yen has weakened to around 156 per dollar. Meanwhile, the Chinese yuan has surged to a 35-month high. And the euro, it's holding strong near 1.18. This is all signaling a pretty broad-based shift away from the dollar. So, with all of this going on, what should we be keeping an eye on next? Well, based on the prepared resources, there are a few key data points coming up that could really shape the next chapter of this story.
Looking ahead, Investing.com's calendar for February 26th, US time, shows we'll get the latest numbers on initial and continuing jobless claims. These numbers will give us a fresh snapshot of the US labor market, and that could definitely influence how investors are feeling. And this brings us right back to that central tension, that main question. Is the market's nervous reaction to NVIDIA's amazing results a real warning sign that the AI bubble is getting a little fragile? Or is this just a moment of fatigue, maybe the calm before the next massive surge, one that's powered by undeniable growth? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
Thanks for watching. Don't forget to like and subscribe.